Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. President Donald Trump says he is not rushing deals, though China reports the U.S. has reached out to Beijing to initiate tariff talks. Philippine government negotiators in Washington, D.C. iron out the best deal possible as the 90-day global pause in tariffs plays out. And just days before the midterm elections in the Philippines, a raft of key economic data are out, from jobs to inflation, gut issues that could prove pivotal to how Filipinos decide on May 12th. We speak with RCBC Chief Economist Mike Ricafort and Christina Ulang, Head of Research at First Metro Investment Corporation. The U.S. reportedly reached out to China to ease trade tensions brought about by President Donald Trump's tariff orders. Chinese state media cited anonymous sources saying the U.S. is seeking to hold discussions with Beijing regarding the tariff issue. Treasury Secretary Scott Bessent told CNBC that both governments are conducting loose discussions to ease import taxes. Trump claimed last week that Chinese President Xi Jinping called him to begin talks, which China promptly denied. The U.S. president said the 145% tariff he imposed on Chinese goods was too high, with officials calling it unsustainable. The U.S. Senate votes down a bipartisan resolution that would have blocked Trump's tariffs. The vote deadlocked at 49-49, with only 3 senators from the president's party joining opposition Democrats in rebuking Trump's trade policy. The measure sought to terminate the national emergency declaration that Trump used to impose the 10% reciprocal tariffs. Senator Rand Paul, one of the 3 Republicans who voted for the bill, said most of his colleagues privately opposed the levies. However, they have calibrated their public responses to avoid colliding head-on with Trump. Apple and Amazon report better than expected earnings, but Trump's tariffs loom large in the succeeding months. Apple posted a $95.4 billion revenue for the second fiscal quarter, up 5% year-on-year. Apple CEO Tim Cook said during an earnings call, the iPhone maker saw limited impact of the tariffs since the company optimized its supply chain. But Cook expects the levies would add about $900 million to Apple's costs, and that trade uncertainties make it difficult to predict what will happen beyond June. Meanwhile, sales of e-commerce giant Amazon rose to $155 billion, up by 9% from the same period last year. Amazon chief executive Andy Jassy told investors operating profits could decline in the future due to the tariffs. Jassy said the company is, quote unquote, pretty maniacally focused on keeping prices down in its marketplace. Japan's central bank keeps interest rates steady and cuts its economic outlook as U.S. tariffs are likely to hit Japanese exports. The Bank of Japan held rates at 0.5% and slashed its growth forecast to just 0.5% this fiscal year, down from 1.1% in January. BOJ Governor Kazuo Ueda said the unprecedented level of tariffs could threaten economic growth overseas and corporate profits in Japan. The BOJ added underlying inflation would accelerate after a period of stagnation as a tight job market lifts wages, signaling that the tariff impact would only be temporary. Tokyo is facing a 24% reciprocal tariff, which is on a 90-day pause since April 9. Better than expected quarterly earnings from Meta and Microsoft lift markets on Thursday. The Dow up by 0.2%, S&P 500 climbs about 0.6%, and the Nasdaq rallies over 1.5%. The benchmark 10-year Treasury yields have settled to 4.228%. As for U.S. gold prices, previous close at $3,305, so it went down to $3,320. Now, U.S. futures are pointed to a gain when the markets open later tonight Manila time, with the Dow jumping by nearly 0.75%, S&P 500 up by about 0.6%, and the Nasdaq gaining 0.4%. Let's take a look at the Asian markets. Looks like they're opening mixed at the start of trading this morning, with the ASX 200 there losing about 0.1%, and the Nikkei gaining nearly 1%. Now, the Department of Agriculture says any deal lowering tariffs between the U.S. and the Philippines would not increase imports, but it could change where the products are sourced. Agriculture Secretary Francisco Tiu Laurel says Philippine industries have nothing to fear as the focus is on shifting sources, not increasing volume. A Philippine delegation led by the Office of the Special Assistant to the President for Investment and Economic Affairs and the Trade Department are in Washington, D.C. this week to negotiate for lower tariffs. Currently, Philippine goods face a 17% tariff, one of the lowest in Southeast Asia, but that is on hold as the U.S. suspended reciprocal tariffs for 90 days. Laurel says it is unclear what the U.S. wants in return, but he believes the 17% rate works in the Philippines' favor. The Philippines is working to join a major Asia-Pacific trade deal. The government plans to submit its application to the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, also known as CPTPP, this year. The move aims to expand market access and attract more investors after the U.S. imposed a 17% tariff on Philippine goods, which was later reduced to 10%. Trade Undersecretary Alan Gepti says the country has been meeting with Trans-Pacific members. He sees the pact as a way to boost exports and investor confidence, particularly with the UK, now part of the group. Meanwhile, trade talks with the European Union and Chile are ongoing. The government is pushing to fast-track these deals as the company prepares to reach upper middle income status. Inflation here likely stayed below 2% in April. Declining rice prices and fuel costs have helped temper the overall prices. A Business World poll of 14 analysts estimate April inflation at 1.8%, which is within the Bangko Sentral ng Pilipinas' forecast range of 1.3 to 2.1%. If realized, it would match March's rate and mark a slowdown from the 3.8% recorded in April of last year. The decline in food prices remains the main factor for tame inflation this month. However, slight increases in electricity rates and LRT fares may have added upward pressure. Bank of Philippine Islands lead economist Emilio Jun Neri says if inflation stays low and growth remains slow, the Bangko Sentral may cut rates again in June. The Philippine Statistics Authority will release April inflation data on May 6th and GDP figures on May 8th. Well, joining us now is Erin Murphy of the Center for Strategic and International Studies in Washington, D.C. to talk to us about the negotiations happening now over in that state between the Philippines and the U.S. So good to have you with us, Erin. Thank you so much for joining us.
Thank you for having me.
All right, so our Philippine government negotiators are there right now to discuss the negotiations, tariff negotiations. What do you think might be a positive outcome from the negotiations?
Sure. There are a lot of governments that are currently in Washington, D.C., and Asia is definitely leading the pack. We have India, Japan, South Korea, and of course the Philippines. And I think for the Philippines, they have a good story to tell. This is a long relationship with the United States. There is a good story to tell about U.S. investment in the Philippines, but also how the Philippines plays a role in key sectors that are important for U.S. economic growth and development. So how these trade negotiations are going, it seems to be a lot of conversations, steps toward a framework, and eventually whether it's a free trade agreement or something more formal like that remains to be seen. But I think that the Philippines has quite a few levers to pull on this to try to help lower tariffs. Again, they have one of the lowest in the region, so that's a good sign, I guess you could say. But certainly they'll be very busy here in Washington talking about what the relationship means.
Right, there is a good story to tell, as you say, and a lot of different levers. I know that you've been to the Philippines, to Manila, in fact, last October, and it was your first time here. What are your insights for you to be able to say that there are levers in the way that you'd want to harness private capital and public investments?
Certainly. CSIS, the Washington, D.C. based think tank, released a report looking at the U.S.-Philippine investment relationship. And part of the title was More Than Meets the Eye. When you look at some of the numbers, it really doesn't tell the whole story of how the engagement is, where the Philippines has really contributed, as I was mentioning, to critical sectors for U.S. economic growth, but also for growth for the region and the country itself. That includes semiconductors, energy, garments and apparel, and other types of sectors as well that really are going to pull Philippines up the value chain, but also continue to contribute to where America's goals are. Donald Trump himself has said that semiconductors, manufacturing, and AI are all important for the United States, and the Philippines has a significant role to play. Other things that we found both in this report and also during my trip here is that there still are steps that need to be taken. And certainly if the Philippines is also considering membership in CPTPP, these are all efforts that are going to get the Philippines right where they need to be, which includes having a better enabling environment for investment, but also having a better tracking system and more transparent data sets so that the Filipinos can also understand what the United States is doing in the country.
And we haven't even talked about the Philippines being a defense treaty partner with the U.S. and the other partner is Japan. I mean, how can and should the Philippines leverage this relationship on top of the U.S. being the Philippines' biggest trading partner?
Certainly, it is really one of the biggest parts of the story. I mean, the relationship between the US and the Philippines is an incredibly long one, and it holds the status of being one of 5 US treaty allies in the region, Japan and South Korea, as you mentioned, being the others. And they're all in a similar trade negotiation with a country, which, I think probably boggles the mind for some, saying, why are we in this position? And I think that kind of reflects a little bit of how Trump himself sees views with other countries, that it is somewhat transactional, but it's also quite siloed. And I think that for those of us in Washington that are looking at the tariff negotiations, but are looking at U.S. foreign policy writ large, is trying to push an idea that there's a holistic relationship there, that there is more than meets the eye. And certainly that defense engagement and the defense treaty is incredibly important to the United States. It also provides a market for U.S. defense material, whether it's for F-16s or a missile system, which is really important for U.S. industries, but also for Filipino defense.
True, and that could have a favorable impact on the trade balance, just talking about those big defense equipment. On to the Development Finance Corporation. There are plans, as I understand, of setting up an office in Manila. How's that coming along so far?
Yes, that was announced mid-year last year, and as you could probably tell from the news, the U.S. is going through a bit of a transition with its own government resources and really taking a look at where it needs to put resources, where it needs to cut resources. I think that the big story here is that U.S. agencies and departments are being cut all over the place. We'll see what happens with the Development Finance Corporation, but I know that there's a general appreciation for what the DFC does, that it does get to the U.S. bottom line of investments and engagement. The DFC has been really critical and has bipartisan support for what it's been doing. And certainly opening an office in Manila will help build that relationship even further, including investments in sectors that we were just discussing that are important to the American economy and not just the Filipino economy. So I think that the U.S. has to go through this discussion about where is the size of the U.S. government heading, where are the resources, and whether Manila is where they should be. But I'm pretty optimistic. I don't say that often, but I'm optimistic that this will be a place and that hopefully this year, I don't want to make any promises, that we'll see a DFC office in Manila.
All right, well, we're with you in that transition. Thank you so much, Erin, for your views. I much appreciate it. Erin Murphy of the Center for Strategic and International Studies in Washington, D.C. Well, it is a busy Eco Data Week for the Philippines next week. Pivotal data on jobs, growth, and inflation that could influence how voters choose their next political leaders in the midterm elections on May 12. Well, with us now for more is Chief Economist Mike Ricafort of RCB. BC. So good to have you back, Mike. Thank you so much for joining us.
It's so nice to be back here, Cathy.
Yeah, so you just heard that conversation with Aaron. Pretty breaking news there, that we got a lot of levers as the conversations go between Jameson Greer and our own folks, Mr. Go as well as Ms. Roque. What do you make of it, of what she said?
Well, we have to also take cognizance of the fact that now the reciprocal tariffs, we'll see by early July if Trump, it's still, there are many variables involved. Trump has many decision points in the sense that he may keep it as is, status quo, the reciprocal tariffs, although he already signaled that he may not extend the pause, or he may do otherwise, either increase or decrease them depending on the negotiations. So
But the
everybody
10%
else.
is already ongoing, that baseline 10% tariff that every other trading partner is suffering from or having to face right now. What impact has that had so far in the months that's passed? I mean, it's already May 2nd, 30 days already passed.
Yeah, true. We have seen inflation numbers in the U.S., the PCE inflation. It's in line, well, some of them are flat month on month, and still among the lowest in like 4 years for the core PCE year on year. And the other inflation metrics, they have yet to really reflect the higher tariffs in the U.S. Maybe because the much expensive stocks, say from China and from elsewhere, they haven't really arrived at the ports yet. And it's still a wait and see, but and that's why the Fed officials are kind of tentative and cautious about it before cutting rates. You have to really give it a few more weeks or months and see if it would lead to higher inflation, because it would slow down not just the U.S. economy, which is the world's biggest economy, alongside with China, which is the second biggest economy. It would slow down everybody else. It's a lose-lose situation.
Slow down the economies of everyone else, but inflation moving higher. So the risk then is we're not facing inflationary pressures here. Are we ahead of the pack or not? I mean, how does that change your view with the Bangko Sentral saying that the April inflation estimate is between 1.3 and 2.1?
Ours, it would ease some more. It would go down. It would even slow down to 1.6% for the month of April. We'll see that data for the first week of May.
Well, what makes you say that? Is it food prices or is it the strengthening of the peso?
Actually, yeah, it's a combination. All systems go in the sense that we have relatively better weather conditions. There's still, because we're coming from a high base. Last year, it was the worst. We had El Nino, we had high world prices, and now everybody else improved. We have lower import tariffs on rice, 15% from 35% since early July, so that's an outright 20% discount. World prices of rice, the lowest in more than 3 years, since November of 2021. And we have seen oil prices also among the lowest in 4 years. So, and the strong peso, the strongest in 7.5 months. So, all systems go, all pointing to, and on top of the higher base effect, you have better weather conditions still, you have better output. That's manifested by, look at the price of the likes of tomatoes since February.
All systems go for who? For the Bangko Sentral to lower rates some more by about 50 basis points? I mean, how many are you going for?
Well, for June, it's possible to see another 25 basis points cut because our inflation is already below the inflation target of 2 to 4%. If it falls below that, that's already a signal that they really have to bring, there should be some healthy dose, so to speak. It may be ironical, but that's a policy. And
that they're inflation targeters, but there is no inflation. So are they going to be growth focused then, considering that there are projections that growth may slow below 6%?
Yeah, definitely. That's policy in favor of growth, and they have all the leeway. Actually, they may cut. It's now also a function of the interest differentials with the U.S. with the Fed. Now the differential is 100 basis points. It's 5.5 for the BSP, 4.5 for the Fed. If the Fed cuts some more later this year, we're going to match it. And the tightest was more than a year ago, latter part of 2023. It was 75 basis points. So we have the leeway. The local monetary authorities, they have all the leeway to cut.
We do, and
rates.
enjoy that interest rate differential that you so talked about. But when you talk to voters, it really is jobs. And this is the last piece of data that's going to be released before the May 12th elections. Will it be a favorable set of data, not only for unemployment, but underemployment?
Through so far, we have seen the jobs data, both unemployment and employment, among the best in 20 years since revised records started in 2005. And we're already down to 3% levels, and we're already moving in line with the more developed ASEAN and Asian countries. So compared to, say, a few years ago, it was like we're among the highest back then, like 6-7% alongside with the likes of Indonesia. Now, that's a factor for the voters. Jobs, prices, opportunities, we all feel that. So now, at least, those would be major considerations. And of course, the economy, the world economy, the challenges brought about by this, the reciprocal tariffs, by Trump's higher import tariffs, that's going to slow things. So that would be the biggest challenge. And there's a need to sandbag, so to speak, and prepare for all of these. And one way to do so is to cut interest rates. Actually, it has been on an easing cycle already since last year. A total of 100 basis points cut by both the Fed and the BSP. And, the biggest lead is still, the Fed, the official estimates by the Fed officials, they're going to cut 50 basis points this year, 50 basis points next year, and 25 basis points in 2027.
All right.
Total of 125 basis points. But that could be mitigated by the fact that, of course, there could be some initial spike in inflation. But definitely, if there's a slowdown in the U.S. economy with some risk of recession, and, even Trump is already pushing for lower rates by the Fed,
Okay.
and we'll all eventually move towards this direction if there's
I like
slowdown
what you
in
said about sandbag operations. So that's what we're going to visually do. But thank you so much for the guidance, Mike, as always.
Yeah,
Mike
thank you so much,
Ricafort of
Cathy.
RCBC joining us in the studio. You're watching Money Talks. Coming right up, Union Bank's net income declines in the first quarter of 2025. And will the Bangko Sentral cut rates further this year? As growth takes priority over inflation, we'll ask a second opinion from Christina Ulang, Head of Research at First Metro Investment Corporation. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Union Bank posted a net income of 1.4 billion pesos in the first quarter of 2025, down 30% from last year because of one-time expenses. Despite the decline, the bank's core operations remained strong, driven by more retail clients, better margins, and rising fee income. Its revenues grew by 8.4%, boosted by high demand for credit cards, personal loans, and teacher loans. The Aboitiz-led bank says it expects to recover and surpass its 2024 performance moving forward. Philippine markets reopened this Friday after yesterday's Labor Day holiday. Let's take a look at how they're trading at the get-go. After that holiday, the Philippine Stock Exchange Index opens higher by 0.33%, reaching 63.73. As for the Philippine peso, it opens a tad weaker at 55.92 to the dollar from the previous close of 55.84. So 4 months into the year, how are stocks in the peso doing? Let's take a look at the technical perspective. Philippine Stock Exchange Index seems poised to break out from what Ron Acoba of Trading Edge describes as a double bottom formation. Now, the decisive move above the key resistance of between 6,360 and 6,400 could signal the start of a new bullish trend. If this breakout holds, the index may potentially retest its 2024 high near the 7,500 level. Let's take a look at dollar-peso exchange rate. It has continued to fall after breaking down from the bearish reversal pattern on March 3, says Acoba. Although a short-term bounce is possible, he says the pair remains poised to retest its 2024 low of 55.50. Continued strengthening of the Philippine peso against the US dollar could attract more foreign investments into the local stock market and help sustain its current rally. With us now for more is the head of research of First Metro Investment Corporation, Christina Ulang. So good to see you again, Chris. Welcome back to the program.
Hello. Hi, great to be here. Good morning, Cathy.
The peso's continued strength, driven by the dollar losing steam. How are you seeing bond funds and the money market exchange funds helping support the peso as well?
Oh, very vibrant now, and investors are really confident that the bond market and the fixed income asset class is really going to give them the yields that they want for this year. And the latest benchmark that was issued by the government has a yield of like 6.375, which is very, very respectable and decent as far as portfolio managers is concerned. It's above inflation, it's above the peso depreciation that we've seen earlier, very well covered already. And I think the expectation of a lower key rate on the part of the BSP is going to create some more upside so that your total return might even be like 6% for this year.
Yeah, but is
That's
that
for the long end,
still
10 year.
reflection of maybe risk-averse set of clients or investors?
Yeah.
Or are they
Yeah.
finding it a haven?
Yes, of course, gold and fixed income are part of the haven assets, and that is where the investors are taking shelter in light of the global trade uncertainty. And of course, our growth prospects and our credit rating was just affirmed to be like triple B plus. That was affirmed and by the credit rating agency Fitch Ratings, and the BSP has been very vocal about it. It's a vote of confidence on the Philippine growth prospects and our relatively least exposure to the global trade uncertainty, knowing that our exports is just exports to the US is just 2.8% of GDP, and our total exports 55 billion is about 12% of our GDP. But that is not to say that we should not be very vigilant about these tariff negotiations.
Right,
We
and
ought to
also,
be.
yeah, keep a watch on maybe 55 to the dollar because it also impacts OFW remittances. But in terms of that relative strengths, maybe how much of a driver is it for foreign direct investments at this point?
Of course, our household spending is being powered by OFW remittances. That is three-fourths of our Philippine GDP. And the global trade uncertainty and this talk about global recession, U.S. recession, and the slowdown might affect it. But we have seen resiliency in the past several decades. It was only during COVID and during the Asian financial crisis and the '08 global financial crisis, where we have seen a moderation and a slight contraction in the OFW remittances. But we have seen very resilient OFW remittances, and I think that's going to continue to be a pillar of our economy. Given that our trade surplus with the U.S. of about $5 billion US is going to moderate and temper because the U.S. wants this surplus to go down by asking us to buy more of their vegetable products and maybe the missile system and the F-16 fighter. So there's going to be a rebalancing as far as our imports concerned. So we need to find new markets for our exports in order to preserve the 5 billion and even grow the surplus that we have.
All right, a lot of silver linings to keep with us through the weekend. Thank you so much, Chris, for joining us. As always, Christina Ulang of First Metro Investment Corporation. And before we go, the mind behind Barbarian is back. Zach Greger returns with Weapons, a chilling new thriller from New Line Cinema. It follows a tap. That is it for Money Talks. I'm Cathy Yang. Catch us again Monday, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great weekend ahead. See you Monday.
kantahan natin ang happy birthday. Eh, syempre birthday po yun. Kailangan po maging maligaya ang taong nag-birthday. At